Good morning, traders. So let's take a look at what's happening here this morning. Yesterday we did get the narrow range day as it was expected. We'll get to the Nasdaq, but which I had spoken about as it related to that. But the S&Ps here just continue in this tight little choppy range right at resistance. What they're waiting for. Well, it certainly wasn't Apple because they're certainly not doing much of anything here. I'll take a look at that in a second. FOMC announcement today, and I think it's around 2 o'clock. Maybe that'll get things moving. So we'll see. Right now, if you're an S&P trader, probably better to just stay away from it for now. Trade something else or sit on your hands. You can see the 30-minute here just chopping, grinding, not really moving much at all. And so I used to trade these on a regular basis every day, and this is just something I would stay away from. The NQs here actually coming back after dropping after Apple's earnings here. There's no doubt these are extended. They should pull back, but as of yet, they're not. Here was the narrow range day I spoke about yesterday. We did get on the wide range day I spoke about yesterday, and then followed by the narrow range day that was expected. It's still early, but you can see as they're trading here, just going sideways a little bit. Here was the drop, and now they're grinding back up into this resistance area. So now it's a wait and see whether they go sideways here or turn back down, or whether they can get above here. Now, if they were to get above here, and then the announcement came out, the Fed announcement and or Facebook after the close, if this then broke down below here, that would be a clear sell signal looking for lower prices. Dow just inching its way down here. Again, nothing to do. The weekly still looks good. This is grinding lower. Bonds. I spoke about bonds and keeping an eye on those for market direction. They reversed back up yesterday. I had shown you this chart of the inverse relationship, and so they flipped back up yesterday. We'll see if this TLT. This is the ETF for bonds. Now, if this is to move higher, we should see the Qs move lower, put pressure on them, and so do the spiders break below this low, leaving an area of overhead resistance. You can see that they're up here. Bonds are up here a bit pre-market. Oil had another dip coming down into this major support area. So buyers had stepped up on the initial drop, and we'll see what they can do here. Apple had dropped, hit the support, buyers down there, popped back up into what's now resistance. And so we'll see what happens here at the open, whether they roll back over or how this is going to react. Big gap down here this morning on AKAM. Fell all the way down into this support area around 52 bucks and bounced up from there. I would watch this one at the open for a potential gap trade looking for lower. As it was grinding up here and now breaking all the way back down here. If you chop around here for a little bit here, you could get some more downside. Now, with this type of a gap into support, the expectation would be for buyers to step up and try and push it higher a little bit, but they've already starting to do that pre-market. So you can use your pre-market chart and see if they start to grind around and maybe turn back down. Just going to a 5-minute here, and you can see a little bit more detail. This little congestion here where it's stalled at here, and whether it begins to roll back over. So that's it. We'll see after the close what Facebook has in store based on its move up here over the last couple of weeks or so. Those earnings had better be good. So that's it, guys. Happy trading. Good luck. Stick to your plan, and we'll talk tomorrow.